FGV's shares jumped by 5.1% today after the MACC arrested ex-Felda boss Isa Samad. The former Felda chairman was nabbed yesterday in connection to the controversial hotel purchases by its investment arm. Officers also raided his home in Selangor last night. Today, the MACC secured a court order to detain him for another 5 days. The agency has yet to decide whether it will freeze his assets. The MACC is investigating the FIC's purchases of a luxury hotel in London and another in Kuching. It believes the FIC had overpaid for both, causing millions of ringgit in losses to the group. FGV's shares closed the day at RM1.65. The Real Estate and Housing Developers Association, or Rehda, is once again calling on the government to relax regulations for first-time house buyers and homes below RM500,000. Bernama Newswires reports that President Fatih Iskandar Mohamad Mansur wants, among others, a lower interest rate and longer loan tenure for transactions in the two categories. He also wants state governments to stop forcing developers to build low-cost houses of RM42,000 and below in unsuitable locations. However, according to Bernama, a property consultant believes it's not just a question of relaxing lending requirements. Jones Lang Wooten Executive Director Prem Kumar points out the growth in property prices continues to far exceed growth in income levels. He says even joint loan applications, which have long been leveraged by developers to sell the more expensive properties, haven't been able to help potential buyers to catch up with the growth in property prices. Bank Negara has said time and time again that eligible first-time home buyers are not affected by its cooling measures and that increasing the housing loan tenure will only add to the total cost of financing. Nomura is expecting Malaysia to meet its 2017 fiscal deficit target of 3% of GDP. This would require Putrajaya to run a much smaller deficit of 0.9% in the second half of this year. Nomura believes this is achievable. It points out Brent crude oil prices are averaging $52 a barrel year to date, above the $45 budget assumption. Nomura is also expecting robust GDP growth at 5.3% this year, which would exceed the budget assumption of 4 to 5% growth. This should support individual income tax and GST collections. Plus, it's expecting the general elections to only take place between March and July next year. This would alleviate election-related spending pressures. Works Corp saw second quarter net profit plunge by 92%. Earnings stood at just RM6 million, down from some RM76 million previously on higher operating costs in water treatment plants, higher amortization expenses and forex losses. Works says its water segment, which typically drives its operating profit, was affected by high maintenance costs as well as higher unit electricity costs after TNB introduced its special industrial tariff. Revenue, however, came in 19% higher at RM91 million thanks to higher contribution from the construction business. Moving forward, the group expects its Sungai Selangor Phase 1 treatment plant, which is the main contributor to earnings, to continue to run its production above its design capacity of 950 million litres per day. This is because of higher demand for treated water in the Klang Valley. It expects the state water restructuring exercise to be concluded in the near term, which will address the long outstanding issue on the repayment from Splash. Pending the final outcome, Works says it will continue to provide for discounting on a deferred payment consideration in respect of delay in payments from Splash. Pharma Niaga's net profit for the second quarter shrank 36.5%. Bottom line fell to RM9.5 million due to lower production at its plants. This was because its production lines were temporarily closed to prepare for the commercialization of new products that were approved ahead of schedule. Revenue inched down by 2.6% to RM518 million on the back of moderate orders from government hospitals. Pharma Niaga declared a second interim dividend of 4 cents per share. Moving forward, it is confident of the sector's long-term prospects.